Number one, I want to understand how was the market like for private credit in the US, not in the region? Because what I'm assuming is like today, if I meet someone, usually they're hired by someone who has been outside
Correct.
and they are the ones who are talking to you about these investments.
Yeah.
So they should know what private credit is. You shouldn't really be educating them
True.
about how that works.
Yeah.
So, what was it like? Like, was it very prominent outside?
Mhm.
But before that, what exactly is private credit?
Sure.
Yeah, let's
So we'll
do
start
that.
with what is private credit.
Yes.
To put it simply, it sounds very mysterious, and it's not really. If we know what banks are
Hmm.
and we know what bonds market is,
Yeah.
we're somewhere in the middle. Meaning,
Okay.
we provide financing for companies that are privately held, so not
Hmm.
usually not publicly listed,
Okay.
that need financing that can get financing from traditional routes. Traditional
Okay.
routes includes banks.
Okay.
So banks typically are your lowest cost of capital
Yeah.
if you're able to get bank financing.
Hmm.
When you look at bank financing for mid-market corporates
Yeah.
or SME, even the small companies, in the West, about 22 to 23% of all banks' balance sheets is to SME lending,
Okay.
which is why you have such a healthy middle class in the US.
Okay.
Because
Got it.
you, as a middle class family or a middle class business owner, you have many stages at various stages of your growth, whether you just started or you've had 10 years of business growth. You have community banks, you have regular banks, you have private credit banks, private credit managers
Yeah.
giving you various financing solutions at different price breaks.
Yeah.
So you can, if you have a business that you cut lawn and you have a lawnmower business, you have a business, a company or a bank that can actually finance you.
Yeah.
If you're opening a new hospital, you have somebody in the Middle East. When you compare what the banks are here, less than 2% of a bank's balance sheet goes to SME lending.
Wow.
And that's been the case. Now it's gone up. It's maybe now 3.5, 3.9%.
Yeah.
So it's that gap between 2% to 22, 23% the West has.
Yeah.
That's why we don't have as much middle class here or mid market corporates growing. We have big families that
Yeah.
grow and keep growing because they either own banks themselves
Yeah.
or they're well known in the country that other banks are happy to take that
Yeah.
risk of that family. Or they have government backed projects, which the banks typically finance. So the West has been able to generate the growth for private credit there grew from a slightly different equation. Banks started after Basel changes. Banks no longer can give these loans to these types of risks because it was too onerous on their cash requirements, reserve requirements. So all of a sudden, investment teams from banks started spinning out
Yeah.
and created private credit firms, and they started doing leverage finance and they started financing M&A transactions.
Wow.
So in the West, then and today,
Hmm.
the story is still different between us and them, us being
Okay.
the Middle East,
Yeah.
is that there it's all sponsor-led transaction, almost all,
Okay.
like 90,
Hmm.
95%
Okay.
sponsor-led, which means
Yes.
somebody like a Blackstone
Hmm.
who's buying $1 billion,
Yes.
doing an M&A, they go out to Ares, KKR,
Yeah.
Oak Tree, and anybody else to say, we need $200 million of senior direct,
Yeah.
or mezz tranche. Please give us your terms.
Yeah.
It's very standardized now, very covenant light, and so then they compete on the pricing.
Yeah.
And so then you had effectively the shift happened when banks were no longer able to serve that. That's when you started seeing this growth of private credit.
Yes.
Fast forward or jump over to where we are in the Middle East. When we started in 2009, back with the BK Capital, there was only 3 people doing it. Like I said, us, Gulf Capital,
And Abraj.
and Abraj.
Yeah.
And the challenge there wasn't so much that was a couple. One, there's still not that much M&A happening.
Yeah.
So we're still doing bilateral sourcing transactions.
Yeah.
Since there was no sponsors, we were doing all the heavy lifting of actually due diligence, like a private equity due diligence, but we're a credit manager. And then the real underlying challenge that we faced, not just us as MBK, but everybody else, that no private credit manager was independent. Meaning
Yes.
they were either owned by a bank, as we
Yeah.
were with MBK, or owned by multiple family groups, as Gulf Capital is, or owned by one guy
Yeah.
or 2 people, like Abraj was. So the challenge in that is that we are long-term investors. Each fund is 8 years minimum.
Yeah.
But the people who are making decisions on the investment committee, their incentivization was not aligned with the investors. Meaning,
Yeah.
the investment team professionals, they have annual bonus cycles,
Yeah.
but the fund life is 8 years. The fund structures were all US style waterfall, which meant they were able to get carry on a deal by deal versus on a whole
Yeah.
fund level as a European waterfall is, European fund structure is. So you had these kind of underlying inefficiencies brewing, and anytime there was a disruption and one asset manager, the other asset manager was able to recruit some of their talent,
Yeah.
and vice versa. So what you had was, unlike in the US, where the founders of these private credit giants that we have today,
Yeah.
Ares and others, have been there since the beginning.
Yeah.
And they stay as founders, and they put
Yeah.
their own money in the firm, in the
Yes.
fund. And the allocators in our region give money to those folks because they see a strong alignment that the founders have their own skin in the game.
Yeah.
Back to where we are back then, that wasn't the same alignment.
Yeah.
The investment teams have the upside alignment, but they didn't have the same downside
Yeah.
alignment. As in, they can make decisions on other people's money, but
Yeah.
they weren't remunerated in the same way that the
Yeah.
investors are waiting for 8 years. So that was a slight difference in back then. Today, where it is, there's now a lot more growth in the managers that exist.
Yeah.
So our old friends at MBK became Janus Henderson. They got acquired by Janus Henderson. We were able to launch in 2020 with the help of Mubadala Capital. And so you're having a lot more institutionalization of the way people think about
Private
how to think
credit
about
today.
private credit and even
Yeah.
private equity. How to think about allocating money to a manager. Do they have skin in the game? Do they have independence?
Yeah.
Do they have track record in doing this, or is this the first time they're doing it?
Yeah.
So it's a big shift from last time being 2009.